back in Darvas's day, again, this was back in the 1950s, and this is just to keep things in perspective, very few individuals traded stocks compared to today. The individuals that were involved in the stock market were generally buying stock, just buy and hold type investing, and they would pick a company here and there, usually on a big name, like Zenith or Westinghouse, the big names of the day. Other things that were different back then. I mean, we're talking so far back. Yes, TV was in black and white. Color TV wasn't even around yet. Of course, there was no internet. The very few computers that were around, I think the Univac was the only computer, or the most advanced computer in Darvas's time, and they ran on vacuum tubes. They hadn't even come up with transistors for computers yet. And of course, there were no handheld calculators, so anybody that was investing was working with pencil and paper. And also, to put things in perspective, yes, this was back in the day when you could buy a house for only $10,000. I mean, a decent house. You could buy a brand new car for $1,000. Things have obviously changed quite a bit since then. Now, as far as his beginnings, when Darvas began, he did not even have the intention of owning stocks. He got started with stocks by chance as payment for one of his performances. I mean, Darvas, his career was a dancer, and one of his performances, the owner was unable to pay him cash, so offered him stocks, and then the show wasn't able to go on. But Darvas had offered to go ahead and purchase the stocks for 50 cents a share, and that was how Darvas got started with stock trading. I mean, he never really had it in mind as the notion that he wanted to be a great investor when he grew up or anything like that. He really knew absolutely nothing about trading stocks. He just kind of did that on a chance occurrence, and not knowing anything about it, of course, he had absolutely no method. Now, over the course of his development, of course, Darvas, starting off not knowing anything, he did make money on his first stocks that he bought, and it piqued his interest. It's like, hey, I can make money with this. So, but he knew that he knew nothing about it, and so he opened an account and relied heavily on his broker's recommendations. He assumed that the broker, would be giving him good stock tips, that the broker did know how to pick winning stocks, and of course he recognized that yes, the broker had experience and knowledge that he just plain didn't have. It didn't take all that long though until Darvas found out that his broker's advice really was not real reliable. When Darvas very first started, the market was a bull market anyway, and so everybody was making money. It was when the bull market started to settle down that things got a bit more difficult, and Darvas found out that his broker Keller was his hot tips and everything were not reliable. So Darvas then decided to look at stock valuations from analysts and other experts who had very complex criteria for valuing the stocks. And what he was looking for at that time were low-priced stocks that were currently priced well below what they were deemed to be valued at. And Darvas found out, again, that yes, this was unreliable because upon further research, he found that yes, the experts, the analysts, often conflicted in their valuations. And even when Darvas decided to learn how to do valuations and did it on his own, he was very disappointed with his own results because he found that with the valuations, you're trying to determine what something is worth. And that's a problem because something's worth what people are willing to pay for it. And Darvas, again, he came to this conclusion. So he then became a technician, and he had bought some stocks based on valuation and opinions and Wall Street sayings and whatnot, and didn't make money on them, and he wound up making money on a stock that he really knew nothing about. And he was smart enough to say, well, all this stuff that I've been doing wasn't working, but this one did, and I really didn't even have a clue. So he decided to pay attention to, what was it about that stock, especially since he had no valuation or fundamental analysis to go with it. He owned it. What was it about that stock that made it profitable? And as he matured as a trader, he definitely took a technical approach because he wanted his decisions to be based on facts, not opinions, not what somebody thinks, not what somebody reads into it, but facts. And he incorporated fundamental reasoning into his overall strategy. And what I mean by that is he got to be a very good technician. His system is very technical, but he also did incorporate some good sound reasoning into it. He didn't just take the system as an end all be all and say I can take this anywhere. He does put some thought into his selection of stocks.